All right, what is up, everybody? Divine Hood here, coming at you with the second video of the day. Now, this video is not going to be for you more advanced traders out there that already know this stuff. I had some requests on how to set up Fibonacci's, how to use the Fibonacci and how to set up the Fibonacci with the settings that I have for different levels. So this is going to be more of a beginner trading video or more for someone that doesn't is not as experienced with TradingView. I'm just going to go through my Fibonacci and show the settings, show how to use the Fibonacci, how to do the pulls on a bearish Fibonacci retrace or a bullish Fibonacci bounce, and we'll go ahead and go through this now. All right, so first thing you need to do in TradingView on your sidebar here, you got to go into this tool, which is gone in Fibonacci tools. You're going to choose your fib retracement here, and you're going to click on your fib retracement. And how you want to use the Fibonacci is you want to use it from us, like if you're doing a bearish retrace. So say you dumped on a dump here and you're trying to find the golden pocket, because oftentimes after a dump, you'll see a bounce to the golden pocket, which is the most important zone for a Fibonacci. The most important Fibonacci level is this golden pocket area, which is between the 618 and the 0.65, 0.618 and 0.65. And this ratio here is found through all of nature. It's found in our Earth's magnetic field. It's found in plants. It's found in many, many different things, seashells. So it's a mathematical formula that is in all of our world. It's used in all of our world. There's no coincidence that it works with trading, because trading is based off human psychology. And oftentimes you'll see after a major dump like this, it'll start retracing. In psychology, people tend to buy right as we're going into the golden pocket. You see it every time. People just never learn. They buy after it's pumped 50-60%, and they'll buy coming right into the golden pocket. They get trapped in the golden pocket, and then you drop. And this is what this golden pocket, after we saw our crazy flash crash on Sunday that liquidated billions in the market, that next Monday, we saw this aggressive pump to the upside, this impulse to the upside, and look where it ended. We hit right into our golden pocket here. Now, this is the index chart, and the index chart and Coinbase hit the golden pocket. Bybit's chart did not hit the golden pocket, but I'm just trying to show you how the golden pocket is often a key area of support or resistance to look for. So first off, I'm going to show you guys how to set up the golden pocket here so that you can just have the golden pocket on and not all the other Fibonacci lines, and clean up your charts a bit. All right, so Fibonacci tool is right over in this left corner, left top corner up here. Just go into Fibonacci, gone in Fibonacci tools. You can choose fib retracement. I also have it at favorited. So you see I have the star here. If you favorite it, it'll be up in your bar up here with your favorite tool. So you can just do a quick on it. Now, I'm just going to pull a Fibonacci in the middle of nowhere real quick, and then you go into your settings here. All right, so I turn off this trend line, because if you turn it on, you can see here that it's got that annoying trend line that shows you where the pull was from. It shows you the high to low. So let me go ahead, actually, I'll turn the settings on, and I'll turn on this trend line, and you can see this Fibonacci pull was from the all-time high to the dump lows, and that's where that pull is from. Now, that line is annoying and it gets in the way, so turn that off. Also, you can choose to extend your lines left or right. I just don't do that. I just push it over. So I keep those clicked off too. That's up to you whether you want to put those on. A lot of people will put it extend to the right, because if they do, let me show you, for example, I'm going to delete this, and let me delete this now too. And once you do your Fibonacci pull, say you want to use your magnet tool too. So go into your magnet tool, you turn on, I use weak magnet, you can use whichever one, but you're going to go to your all-time high, make sure the magnet's on the all-time high. You click it once, you pull it down to your low, and then you click it again, and it will show there's your pull right there. And then some people will come in here and just say extend right. That way, you know, it'll go through all the price action, because if I don't extend it right, you can see that it's not quite to our level that we needed to. All I do is I click on it, and I just use my arrow key to shift it over. I know some people will just shift it over with the mouse, whatever you want to do to feel comfortable there. All right, so that is that part. Now go back into your settings, and here's all the levels that you have. So what I do here is I turn off all of the levels except for the 618. Now the 0.65 is not a default setting in here. So just go to any one of them. You can use the 0.24, just delete it and just type in 0.65, and it's not 86, geez, 0.65. And then you can make it whatever color. I like to make it like gold, like it's a golden Fibonacci, so yellow or gold, that color. So, and I leave the other one, the other base color. You can do whatever you want with it. I just use that one, so you can see I already put that in there. And then make sure you come down here and you turn the background off, because usually the background is going to be on and it's going to be fully on like this. And that is annoying. Well, it would be on the other part, not just this part, but you could do that too. So you have that zone highlighted for you. I turn off the background. I think it's just easier to turn off the background. Reversing it, that just makes it, the pull reversed. Now, if you should be doing your pulls manually, and then yes, you can reverse the price when you're trying to find different things, but I'll just do a different Fibonacci pull on that. Prices, I mean, you can leave the prices on or off. I like to leave the prices on so I know what levels I'm looking for. The values, you can leave that on to the 0.618, 0.65. I just leave them on so that I am clear there. You could turn that off. It's your preference there. Now, I like to put my labels on the top right of it. You could also do middle right here. That's pretty good too. Whatever you want to do there. Now, your text, you could turn your text off here. Let's see. Yeah, because you can actually add text to it. So you can leave it on. And if you add text, then you can have the text in there or on the Fibonacci. Now, I just leave that on and I just don't mess with that part. And then the font size is obviously based off the text. Now, this is an important box here. Fibs based off a log scale. So you can see here on this chart, if you come over to this corner or if you right click, you can see that if you go to settings, no, where is it? There's a shortcut to it somewhere here. All right, well, I don't know where that shortcut is. Anyways, this log button logs or unlogs the chart. So, and especially with altcoins that have had massive pumps to the upside, like I could show you here with XRP. If we go into, and I'm going to use a chart that I've never used, so I'll use the Bitstamp chart here. Let's go on to the weekly chart here. And right now I'm not on log scale now, and you can see that all of this is like flat, and then we get a huge giant pump. So it's almost impossible to do TA on this, accurate TA, just because the pump is so aggressive. So what you want to do to account for that when you see large percentage moves is you turn your log chart on here, and then when you zoom in, you can actually see the price action better. The log scale just accounts for large percentage moves in the price action, and it also does make it more accurate. But let's say you're using a log scale like this, and your percentage move from the low on the weekly to the high on the weekly here is a 937% move. So let's say I did the Fibonacci pull on that same low to the high. You can see the golden pockets here, but that's not 61.8% of this pump. You can see it's way closer, up to like 25-30% of the pump, because my chart is on log scale and it's measuring a large percentage move. Now, if I come into settings and I go to fibs based off of log scale, now I hit OK, and you can see it's at its proper place now, about a 61.8% retrace of this move. Because what you're trying to find is when it says 0.618, that means it's a 61.8% retrace of the move to the downside. We pumped up. This is obviously 100% of our move. And when you retrace 60% of the move, you're in the golden pocket, and then you could see a reversal in price. So if you're using log scale, make sure, and it's a large percentage. Now, let me go back to Bitcoin here, because I just want to show you BTC USD. I'm going to go to the index chart that I was on, and I'm on log scale now. When I pulled that fib there, I did not go in and click fibs based off of log scale, because this percentage move, even though it's still a pretty big percentage move for Bitcoin, it was only a 16% move. So you don't need to use a log scale fib on a 16% move. You want to use it on like 200%, 300% and more. I would say even 200% is it's getting there where you need to use the log golden pocket to be more accurate with it. It might give you more accurate reading, but overall, if you're measuring like under 150% for sure or under 200%, just leave your fib on regular, not based off log scale. Just leave it on the regular fib and then you just hit OK here. Now, we've set up our Fibonacci here, and the next time you pull it, it'll go all back to normal if you don't save this as a template. So what you can do is click on it to make sure it's highlighted here. You're on it. Come up to this square box up here, templates, and then you can say save drawing template as. Now, I would just type in for this one, golden pocket, and then, of course, that's horrible, golden pocket, and then I would hit save. Now, I've already got that, so I'm just going to hit no. So I've already got one saved as no, but you would hit yes, and then now every time you do a fib, so like say your basic fib is like something like this here, where it looks like this, and you can see that trend line in there that's really annoying and stuff like this, you would just come up here. So you'd pull your fib from high to low. Let me get on back onto a good chart here, 4-hour chart. And let me hit auto so we're here. So you can see if I pulled that fib and I just had it on like a different setting here, it's showing you all the levels, all the basic fib levels, the 236, the 382, 0.5, 0.65, golden pocket area here, 786, and then the 1. And then, of course, there's expansion levels too. But what you would do now is I would just click on this to make sure it's highlighted, come in here, hit my golden pocket. Now it's already, I can apply it to my golden pocket template. Now, the 0.5 golden pocket area is a very, very common area for corrective retracements. So if you see a big impulse to the upside and it's starting to correct down really slowly and it looks like it's more corrective price action, the 0.5 is often a great target where it will end the correction, and then you could, yes, the 0.5 is a good area where you can end the correction. So this did pump to our golden pocket, but oftentimes in a correction, you'll pump to your 0.5. So in my templates here, you can see I have it as like an ABC correction target because that's one of the targets there. So what do you do if you want to get just this on your chart? You would pull another Fibonacci tool. You'd grab here, you'd pull another Fibonacci tool, you'd go into your settings again, turn off the trend line, turn off the, or you can turn that on or off depending on how you like it. I leave them off. Now, unclick all of the levels except for the 0.5. Make sure you unclick the background. You can click these to your preference if you want prices on or if you want prices off or if you want the level on or the level off. You can click it to your liking, however you like to set it up, and then you'll hit OK here. Now go up into this box again, and you'll hit Save Templing Drawing As, and then you could just type in like 0.5 only, or you could type in whatever you want to type in for it to save it so you know that's your template. And then you would hit Save there, and it would save it up in your templates. Now you can just use templates every time. So with my 786, instead of pulling a Fibonacci, going into settings every time, turning off everything, which is super annoying, I have a 786 template saved here, where if I click on it, it will just show me the 786. And the way you do that is the same exact way. Pull a Fibonacci, go into your settings here, make sure you're on the style tab as well. Make sure you're on the style tab. Turn off the trend line, put it to your liking, turn off all of the levels except for the 0.786. You can change the color if you'd like. I leave it on default. I guess I'm lazy, I don't care about the color so much. So, and then you can just leave it, make this to your likings. I would definitely click background off if you want the background off. I think it's annoying, but you could do you. When I click it on, what I used to do is just bring the opacity down to 0, which is pretty much the same thing as clicking it off, but it's just easier to click it off. And then you hit OK, and then you have your template saved for your 786. You can come in here, you can make a bunch of different templates just based, like, this one is the JC Pocket. I named this after Jason Casper because Jason Casper, who you guys all know and love in the Discord, trader on YouTube, really great guy. He often talks about that area. Actually, I'll just go up to my box here. He often talks about the area between the 786 and the golden pocket as a major rejection zone, especially on like 1 minute time frame retraces. Oftentimes you'll come up to that golden pocket, what I call JC pocket area. So like, let's do an example of this. Let's do a Fibonacci pull from this high to the low that we made. And we go over here and you can see that JC pocket area is kind of where we rejected there. It didn't quite hit the 786, but it went past the golden pocket. So that general area there between the 786 and the golden pocket, oftentimes you will see a rejection in this box here between the 786 and the golden pocket. So I have a template on my chart with my fibs named JC Pocket because I think that's a good pocket to look at of a support or resistance. So I have that on there. Now you can see down here I have one called strong trend because oftentimes in a very, very strong trend, you will bounce after like an impulse. Let's say that we see the start of an impulse here. So we have our big explosion in a wave 1, a wave 2, wave 3 to the upside, and our wave 4 is going to retrace. Oftentimes, the wave 4 will retrace. If I do a Fibonacci pull from the low of that move to the high of that move, oftentimes the Fibonacci will retrace to the 0.382 because the 0.382 acts as strong resistance and support in a strong trend. So if you're trending very strongly to the upside and you start to see a retracement and looks low volume corrective retracement, the 0.382 is a great example of a spot that can be hit where you can pump. Let me show you an example of that right now. Let me go ahead and get rid of this stuff on the chart here real quick. Let's zoom out onto the daily chart. And let's just hit auto so it can correct this for us. Now, we're going to do a Fibonacci pull from, if this is our impulse here, the start of our big daily impulse, we have our 1, 2, 1, 2. This is our third wave up here. And then we might be, this is our fourth wave here. And then we might be in our 5 right now on this daily impulse. So what do we do from the start of our third wave to the end of our third wave? And remember, this high wasn't made yet, so this would be the end at 108. This is the end of the third wave. And you can see we did come down and hit our, and let me make sure, let's see. Yes, and I did put that to log scale now because this is a big percentage move. Let's look at the percentage of the move here. This percentage of a move is 62%. So I guess if it's a larger than 50% move, you can put on your 382 and you can see on that dump that we had where we dumped to 89K, one of the reasons why we bounce is because obviously this here is a very strong trend on the daily. We are going up aggressively on the daily. You topped out, you can put on your 382, we have a drop, we range for a bit, have a drop to the 382, bounce from the 382 and make a new all-time high. I mean, that's over a $10,000 bounce. Let's see here. I mean, that's a, $18,000 bounce. So the 382 was our very strong support in a strong trend. We bounced from it. We went up $18,000. So the 0.382 is a very key Fibonacci level to use in a strong trend. And that works both for support and resistance to the upside. If you're seeing a very, very, very strong trend to the downside very aggressively, and you start to kind of range sideways for just a bit, then you might come up to the 382 and then continue right back down. So the 382 strong trend. So I have a template on my Fibonacci for strong trend. Another one you can use is expansion levels. So when you're trying to find an expansion, for instance, if you do have a Elliott wave, like a 1 wave, 2 wave, you big third wave here, 4th wave, 5th wave, and you're trying to find the target of the 5th wave, oftentimes what you can do, one of the methods to find the target of the 5th wave is you'll do a Fibonacci pull from the highs of the 4th wave to the lows of the 4th wave, and then you turn on your expansion targets, and your expansion targets can often be corrective, like the 1.618 is a very common expansion target for your 5th wave. You can, the 2 levels pretty good too. I mean, there's just different expansion targets that you can have on here. So you can come into here, and what you do is you click on your settings here. You turn off all of your base settings like the 0.382, 0.618, blah, blah, and then you leave everything on on 1.618, 3.618. You can turn off whichever ones you want. You know, like if you don't want to go past the 3 expansion, sometimes we do see pushes past the 3 expansion, but you can look at your expansion levels on this, and then you can have those all on. You can hit OK, and then just make sure you come up here and save drawing template as, and then you can type in expansion and then save it. And these are just different templates you can set up using the Golden Pocket tool to help you get the proper golden pockets for the scenario you're looking at. All right, so that's pretty much it. I mean, you can see I have the 886 only. So 886 retrace is often a very, very great retrace. For instance, on the mega dump that we just had on the weekend, last weekend, we had this very aggressive dump to the downside. And we can go into this range. Let's go ahead and go onto the daily chart. We can go into this range. Let me get rid of this thing here. Go into your range, and from our last, because remember, when you're pulling a Fibonacci, you're looking at key swing positions. So a swing low to a swing high. If you're looking for a bullish retracement, so after you pumped up, you start to retrace. So that's a bullish retracement, right? You're bullishly back testing a support to continue higher. If you pull it from a low to a high, from a high to a low, you're looking for a bearish retracement because we started the initial price action here. We dumped to here. Oftentimes, if you want to find your bearish possible rejection levels, you'll pull it from high to low, and then you find your areas that way. And you can see, like, if we go in here and we go to our golden pocket, you can often see, you'll see the golden pocket rejection, which we saw last Monday. You know, we dumped, we had the mega dump on the weekend. Monday, we pumped up to our golden pocket. It was our bearish retracement golden pocket. We hit into it and we rejected. Now, if you're trying to find a bullish retracement, such as an 886, because 886s, especially recently, have been working really well, you'll do your Fibonacci pull from your low to your high, and you can use your swing positions here, and you turn on the 886. Well, guess what? On that dump on Sunday night, we hit right into the 886 and we bounced. And it wasn't just because it was the 886. Also, we did have our value area low right around there of this big daily range. But look at how well the 886 hit into and bounced. And when we hit into this 886, if I zoom in on this so it's not just one daily candle, let me zoom in onto the 2-hour chart. You can see here that we were very, very aggressively dumping over the weekend because of the trade war fears. We dumped right into the 886, got an immediate bounce from the 886, and then we pumped up. Where did we reject on the pump? Well, I just showed you guys that. Not that pull, I'm sorry. I have to go from all-time high to low, and we turn on our golden pocket. So look at how well Fibonacci levels work. Not only is this near our value area high of the range, so you can use them in confluence. The best thing to use a Fibonacci with is in confluence with other volume levels, order blocks, other things like that. And that's more advanced trading, but just start learning all the tools, and then you can learn what different tools do, what they are, and then you can build confluence on levels to know what the best levels to look for shorts are, know what the best levels to look for longs are. Like this level down here, when we were mega crashing to the downside, $10,000 or more in a day. How did Jason know he caught this long from the 886? How did he know? Because he saw we have our big range value area low down here in confluence with a 886. This is a key support that I am going to look for longs. And he talked about this is a level that I'm looking for because of it, literally a day before it happened. So he was prepared for the trade because he had already mapped out the technical analysis. He found the key level of support. He had a couple others too. We all had a couple others that we were looking at. We were looking at the golden pocket at this area of the point of control, but of course we busted through it. So he found the key area of support. When it came down there, he saw confirmations to long. He took the confirmation to long. Now we bounce from that level. We do the bearish retrace from it. We pull it from the all-time high to the low of this big, huge dump that we saw. Guess what? Reject from the golden pocket. Why? Because the golden pocket is a key level, but it also had value area high confluence. Now, I've talked about this in the last few videos of mine. I really would have liked to come up a little bit higher to actually hit the value area high and to hit our 0.65 golden pocket area. This area here was really the area I was looking for between this area here. Now, this is also very acceptable. We had a weekly in here. Remember, we had that weekly that we touched to the dollar. So if you go onto your weekly chart, I can show you guys real quick also how to pull a weekly level. When you're on your weekly chart, when you see the candle close and open at the same exact spot, that's a weekly level here. So that's a weekly level here. We had another weekly level here because our candle close and open was in the same exact area. And you can place that there, and then I have a template for weekly. Guess what? You can make templates for all these different tools. So I come into here, I click weekly. It makes it the color I want it, which I like my weekly to be orange. I have it labeled weekly over in this corner. A lot of my templates, though, I started labeling on the other side, not that one. Like, for instance, SR flip, I have it labeled up over here. I do think labeling it to the right is better, just because a lot of times you're not looking to the left of the chart, you're looking to the future, the right of the chart. So you can put your levels here. And that's just a way to use the tool, So I'm getting into the weeds here. Sorry, you guys. This, I just showed you how to do a weekly, but I shouldn't have even explained that why we rejected from the weekly, because that's not important to this tutorial on how to pull Fibonacci's here. So that's pretty much how to pull a Fibonacci. And that's it. You can just choose different, you come into your Fibonacci, you can go from high to low here. Actually, I just showed this in earlier today's video, and I will go into this here. So we've been dropping in this descending channel that I've been showing. Let me zoom out onto like the 30-minute chart here. And let me get rid of this stuff. Let me clean this up. So I showed this channel. And by the way, you can set up your parallel channel tool in the settings too, because the settings on the parallel channel are horrible settings to start out with. So you go to the high, I bring it to the lower high here, and then I bring it down to the low here. And you can see we had been trading in this descending channel. We had the fake breakout earlier today. We came back down, and then we've kind of been ranging, but you can see from this part on, it's been more, or actually from this part on, from this low that we made the other day, it's been more sideways. You can see this was a clear 3-wave zigzag to the downside, and this, from this point on, it's been more of a sideways correction here, right? And so I did a volume profile pull of that sideways range, but I also, when we dumped and made the low earlier today, we front ran our big golden pocket from this low to this high. I was looking for the golden pocket, which was right below us. We front ran it. I said in my video, okay, guys, if we do bust up here and we're looking for a corrective wave, because this price action looks weak, it also looks like a 3-wave zigzag to the upside, a corrective structure, 3-wave corrective structure. Where can we look for our rejection? Well, let's just do a golden pocket pull from our high that we made at the beginning of the day to our low that we made at the beginning of the day. And guess what? We rejected from the golden pocket. It was also in confluence with our value area high. I gave this level before it happened in my video, and I said this is our local rejection point. If we're going to reject locally and continue this range over the weekend, that's where to go. And look at what happened. Hit up into our golden pocket, and now we're rejecting. Now, guess what? We could also do a golden pocket pull. You can go on to even lower time frames, lower pulls. We have a clear low here. We have a clear lower high here. We can do a golden pocket pull from this low to the high that we just made. And look at this. Our golden pocket is on our point of control. That is confluence. So we might expect Bitcoin to continue dropping here. We might see a bounce here, continue up, and just continue to range in here, So this would be our local support level right now that I'm watching overnight. Of course, I'm not going to be watching it. I'll be sleeping, but you get the idea. This is a possible local bounce area if Bitcoin's going to continue ranging in this sideways range here. Obviously, you don't want to blindly long from this level just because it's a golden pocket. You want to be looking for your confirmations on your indicator, on your oscillator, on other things here. But this is how you use the tool. So that's pretty much it. And then, of course, you can set it. Say you think this was a strong trend. Obviously, it was not. It was a 3-wave corrective structure to the upside. But say you thought this was the start of an impulse. You could have taken that same Fibonacci, this same Fibonacci pull from this low to this high, and you could have put on your 382 and you say, okay, I suspect this is a strong trend. I suspect we're going to bounce from here. Obviously, it's not. And obviously, we're dumping to the downside as we speak. But this 382 could have bounced us if it was an impulse to the upside. Now, this is clearly a three-wave corrective structure, you guys. We had our push up here. We had our push down here. We had our push up here. Three-wave corrective structure. Now, more downside. But I'm getting into the weeds again. So, all right, that's about it. I mean, I don't know what else to cover on the Fibonacci. Just, going into the settings and setting it for yourself so that it looks cleaner on your chart, so that you don't have that line across your chart, or you don't have the background on that looks a different color. You can set these colors to whatever you want to. So I know a lot of people that for the 618, they put it as gold too, and they leave their golden pocket all like that, just pure, gold or yellow. Some people like Kuhn's Trading, he has his red only. You can choose whatever color you want. You customize it to your liking. But that's it. That's what you do. And look at rejected from Golden Pocket. Golden Pocket is the best, most key level to look for support and resistance to come in on a retrace. Now, they call this the fib retracement tool for a reason, because you're looking for either a support. If it's a pump up, you're looking for a support to the downside. On the retrace, it's a retracement tool. Or if it's a dump to the downside, you're looking for a bearish retracement up to your resistance level. Now, there is another Fibonacci tool out there. If you go into this Gone and Fibonacci bar over here, you can see trend-based Fibonacci extinction. Now, this is a completely different tool, and this tool is used a lot in Elliott waves. Let me get rid of this. Let me get rid of this channel here, and let's clean the chart up. So a trend-based Fibonacci extinction is how you find extinction. So like, for instance, after we had this clear impulse to the upside, this was a double 1-2 impulse to the upside on 1 2 1 2 3 4 5 4 5. I've showed this in my video today. I showed it in the video yesterday that now is public. Sorry about that, guys. Anyways, we had our 5-wave impulse, and we started kind of grinding down slowly over the next day. So he said, okay, we can look for this to be, well, this was a kind of a fast push down, and then we started grinding slowly sideways. So he said, okay, this looks like a corrective could be an ABC correction. And I pointed this out while we were still in the A wave, that this is probably an ABC correction. Now, an ABC correction is an Elliott wave thing, but you have your A wave, and remember, it's a zigzag correction, just like the correction we just had. It's 3-wave correction to the downside. And then you either look for, usually you get a push up from it, or you can just look for a more complex correction, is what we're going through now. But you can also see here, in some ways, this was almost a 3-wave correction. High to here, to our low here, to our high here, our 3-wave correction, and now we're seeing our push down. So how do you find the correction? If you want to know, okay, we finished our A wave here, we just topped out on our B wave, and you took this short from the B wave. You say, okay, by the way, let's look at this B wave on this ABC correction. Fibonacci pull. We use our Fibonacci pull. We're going to go from the high of the wave to the low of the wave. Well, guess where we rejected? The golden pocket, the most pure, awesome level there is. We rejected from the golden pocket. So now we have a clear A wave down. We had our clear retracement up to our golden pocket. And say you shorted this golden pocket at 100.9 or 100.7. And you say, okay, I'm going to take profit. If I think this is an ABC correction, I'm going to take profit at the targets of an ABC correction. Now, one of the targets of an ABC correction, if you go into your Fibonacci tools up here, and you go to a trend-based Fibonacci extinction. So this is measuring a trend. This is clearly a corrective trend to the downside. So what do? You put your Fibonacci, the start of the dump to the end of the dump. That's your A wave. So the start of your A wave to the end of your A wave, you click it again, and then you have a third pivot where you put it to the top of the B wave. Click it to the top of the B wave. So you have your 3 pivot points. Start of A wave, end of A wave, start the end of B wave. And then you pull, and then of course I just click on it and I slide it over so I can see. But look at where we ended our correction, at the 1-to-1 fib extinction target, because the fib extinction on an ABC correction, the most common targets are really from the The 1-to-1 target to the 1.236, these are very common. This area here is the area where you're really looking for an ABC correction to end. Now, if it drops to the 1.618, that could be the start of a 5-wave impulse to the downside. Like you'd have your 1 wave, your 2 wave, your 3 wave would come all the way down to the 1.618. You might see a 4 and then a 5. So that's getting into Elliott wave theory. If you guys want to know more about Elliott wave theory, Kuhn's Trading is like the master of Elliott waves. That guy is amazing. I'll show you guys as much as I can show you about Elliott waves too. As you watch my videos daily, I'll explain that. And I did explain this ABC Elliott wave correction way before it happened. Like we were still in this area when I was talking about it being a possible ABC. And so, of course, we did get the rejection from the golden pocket. We came down to our 1-to-1 fib. We could have taken both those trades. We could have taken this here knowing it was the end of a B wave, and we could have taken at least a long from hitting the 1-to-1 fib extinction target. Now, if you hit that, you have to look at this price action here to see if it's going to make another lower high, which it did here. So you would have your first TP would have probably been the VWAP, because the VWAP is often support or resistance in a trend or even in ranges sometimes, So anyways, that's getting into it. The fib extinction target. Let's say you do your pull here, your 3-wave pull. Obviously, your stock one is going to have a bunch of crap on it. It's going to have that trend line on there. It's going to have the background turned on, and it's going to have all the levels in here turned on, or a majority of them. I don't know how much the default one has because it's been so long since I've used the default one, but it's the same exact thing. Just go into your settings, make sure you're on the styles tab, click off the trend line because it's annoying. You can extend the lines left or right if you'd like to. I don't like to. And then you turn your background off just so that you don't have that. Look at, if I extend it now, you can see that it's not, you don't have that fill within the gap there. But you can do whatever you want, whatever you like for you. I know some people that actually, like, for instance, say the Elliott, ABC Elliott there, or the target for a ABC correction is between the 1 and the 1.236. So they actually do turn on the background here, and they'll like turn it to half opacity, and then you can see that's there. So what they would do in this instance, you have your pull here. You go from what start of A to the end of A to the start of B, and then you would have your range boxed out already here. So you have a clear box, and you don't have to come in here and draw your box like this or whatever you want. I like to do it manually but you could do that as well. So you have your clear box of your correction target area in this area. It's up to you, however you want to customize it. Make it to your liking. For me, I just turn off the background just because I don't like it. You can do that if you want to. Prices, same thing. You can turn off the prices on or off just to see the price of it. You can turn off the labels to see. I like turning on the labels at least, because then it's the 1-to-1 or it's the 1.236. If you turn those off, unless you're very familiar with it, you might get it mixed up. And then yes, you can have your fibs based off log scale. So if you're on the log scale, you can turn that to fibs based off log scale or unlog scale, and then you just hit OK. And then once again, come up into here, save drawing template is, and you could just put ABC target zone, and then you have that there, and you could save it. Now I have it saved as my ABC target zone between these two here. Now, of course, I would want to turn off all the other ones, but so you can see I only have those two turned on. All right, that's about it, guys. That's how you use the Fibonacci tool. You want to pull it from a swing low to a swing high. And when I mean swing low to swing high, depends on what time frame you're on. On the 30-minute time frame, this is a clear swing low. This is a clear swing high. Now, if I zoom out to the daily time frame, you can't even see that, That's not a clear swing high to swing low. But on the daily time frame, this is our clear swing low. This is our clear swing high. Go on to the weekly time frame. You go on to higher time frames. Now, generally, the higher the time frame, the better the support is. Now, this is our clear swing low on the weekly, this 49K area here, and our clear swing high is our all-time high. Well, guess what? You could do your Fibonacci pull from that low to that high there, and look at this 70K to 72 area. I mean, this is the mother of all long support here. You could come in here, and you could actually extend it left in this case, extend it right in this case. Now, look at how nice also this is as a support resistance flip. It was resistance, resistance, resistance here, resistance here, resistance here. Now it's a support level. Now, obviously, it's not based off this golden pocket because this golden pocket wasn't made until after all this price action was already done. But I'm just showing you how, well, I guess I shouldn't be talking about this. I'm just showing you 70K is an important support based off of historical price actions of what's called an SR flip level, your support resistance flip. What used to be resistance is now possibly flipped to support if we do crash to 70K. But that's, I'm sorry, I keep getting off topic. Okay, guys, that's about it. That's it for this. There's other tools to use. I will make another video on how to set up your pitchforks. I will make another video on how to set up your channels. And I will make a video on, let's see, there was one other one that, well, you can, your volume profile, to set up your volume profile. And yeah, just the other tools you can use. So hope this helps for now. This video is really only for people that are newer to TradingView and haven't kind of dove into that part. That doesn't mean you're a bad trader either. That just means you're newer to using this platform and saving the templates and all that. So, all right, guys, have a good one.